Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone's having a good day, a good week. As wonky as the week has been, we're seeing what low volume and frankly less attention on the price action on the markets, on the symbols that we like to watch. We see what this can do. It's a lot of wayward action. Yes, there are some really interesting setups that we could try to take advantage of. But this is the week where instead of talking about fills and setups, let's talk about watch list building and participation. We know that fills get us in. We know that no fill, all right, we're not going to have an opportunity to take advantage of an open trade. But it's not the fill alone that is how we make money as traders. It's the follow through. And when participation is low, when volume is low, and folks are apathetic, or if they're waiting on other data that could lend a lot more certainty, if I even want to use that word as it pertains to trading. But whatever, say, next week's non-farm payroll might bring, whatever, say, more participation around the globe in the equity markets, whatever that might bring, that's the follow through that we're going to lack. As a general rule right now, the list of uptrending stocks is far, far fewer. The list of downtrending stocks is pretty much the same set of stocks and sectors that we liked last year to the downside. But when we're in an accommodative monetary policy cycle, the Fed's cutting rates, I'd rather be long because the broader averages have generally been up. And most of the high concentration weighted stocks and sectors have been moving with it. So I'm not looking for exceptions to the rule. I'm not looking for a weak stock in an overall bullish risk appetite environment. And I'm not necessarily looking to be bearish either in names that may be pulling back, even though they're in an uptrend. Case in point, something like Apple. Apple's still in an uptrend, but a lot of the apathy, a lot of the concern about the Federal Reserve continuing to cut rates. I mean, nothing really gets to hide out from the lack of clarity on the lower rate front. I mean, case in point, even Bitcoin, right? For folks wondering, Ron, does Bitcoin care about the Federal Reserve? That down candle was on the 18th. It was the same down candle we see on the indices. It's the same down candle we've seen on so many other stocks. So yes, I mean, it doesn't get a pass. It may not be as weak as, say, the Dow, right? But it's certainly not in any way outside of the risk appetite that we see when money is cheap and folks are willing to take on more risk. So, that's another thing to keep in mind. There are some commodities that are trying to get going and get out of their own way as we start the new year. And one of them is crude oil. Crude has yet to get above 76. And that's a big deal for me since Q3. That's a big deal. The last time it attempted it was on the 7th of October, and you can see what happened in the aftermath. So finding not only our way above around 76 on crude oil, this is crude oil futures, by the way, that would be the first step. The second step would be whether or not support can be found above 76. So I'd want to see a breakout, a retest, and then what was the old ceiling becomes the new floor. Still not seeing much of that on crude, but definitely know the scenario that we're looking for. Gold is the same way. Gold is just stuck, right? This was a great, we traded gold and gold miners through late summer and into September. And look at that trend. This is what we want to learn to recognize early in the trend, not looking back and saying, oh yeah, that was an uptrend through August, September, October, and into November. I mean, in real time, what are the processes? What are the indicators? What is it that you're using to say, hey, that was then, this is now, but this is how, if the now were to turn into an uptrend or downtrend, I would recognize it very quickly. And one of the things that we talk about in the Sector Secrets Mastery is, do you have a way right now with whatever set of tools and processes you have to say today is still neutral, but bullish momentum. Or today is still neutral, but bearish momentum. The bearish momentum is continuing. Now we've got a downtrend. Or the bullish momentum is continuing. Now we've got an uptrend. Those kinds of things. And that should be something you should be able to assess every single day. Not in hindsight, but in real time, whether that be the color of the candles you use, whether that be some sort of indicator. It doesn't have to be mine. It really doesn't. I think mine are really simple. However, whatever it is you use, where in a real time and in a confident way, you can say, this is neutral and I don't really have a directional edge. Being able to eliminate certain symbols from contention. In other words, symbols that are distracting, that may not do what you want. That's a really important aspect of trading. Or sometimes just saying, watch list building is really the process of removing symbols from a bigger list, right? 6E, this is the euro. A lot of folks have been asking me, Rag, is the dollar strong? The easiest way to look at the US dollar strength or weakness or whatever it's doing is to look at the euro. It's actually not just the easiest, it's better. And some folks might say, Rag, what about the dollar index? What about UUP ETF or DX futures or the DXY? That is a basket. That is a basket that is diluted with 5 other currencies that don't have as much impact, or I should say directional influence on the dollar as the euro. You want to know what the dollar is doing? It's going to move inverse to the euro. So if the 6E is moving lower, red candles, downtrend, below these white dots, which I call the equator, we've got dollar strength right now. And that's actually been the case since early October. So this is not new. When folks say, oh, the dollar is so strong. Oh, gosh, no. The dollar's been strengthening since the first week of October because the euro's been weakening at that same time. All right. So let's see what else we have here. Let's see. Questions. What are my thoughts on coin? Tim? Sure. And by the way, the candles that I'm using on my chart, some of you might have the tops color-coded candles, the green, red, and blue, and the 34 EMA wave, and the multi-trend. And that's the standard version that I've used for better part of almost 25 years. The version I'm using now is a premium version. It's called Top Tier, and it's rebuilding, it's reimagining what it is that we have to look at now to understand momentum and trend and structure, market structure. But whether you're using tops or top tier, you're on a very well-tested set of indicators and a process that's going to help you do exactly what I'm doing here in Charts and Coffee and in the Sector Secrets Mastery, every single day. Coin. So let's go back to some of the indicators here. So Tim, I'm going to point out a few things. Now, let me grab my drawing tools here. So I'm going to point out a few things on this chart. And then, if you want to compare to what you're looking at or see where things line up. All right. So first up, we do have a neutral market structure. So that gray at the bottom is a sideways, non-trending market structure. However, we have a guideline in the mastery, and this is something I've done for most of my career. Respect the trend that was. So what is the immediate trend before the sideways environment that we're in right now? It was up, right? That's the green color on the lower row. So the trend that preceded the chop was up. I will always keep a little bit more of an expectation for follow through, for continuation in the direction that was. Most traders presume that a broken uptrend is a downtrend, when in fact a broken uptrend, and its fancy word is distribution, which is chop. Well, is a distribution bullish or bearish? Depends on the trend that preceded the chop. So I'll always presume continuation. Now, when do I start to change my mind about continuation? I'll tell you how quick that was. That candle right there doesn't get me bearish, but it certainly stops me from being bullish. Now, through all this green, no problem. Through the yellow, no problem. That first red, that's the attention grabber. By the time I've got 5 of these, it's a very different environment than it was. And look how quickly we can assess that. It took 1 day to say, let's tap the brakes on this thing. 5 days later, I've got confirmation of weakness. So that means, and even as quickly as 3. So that means as soon as the candles go red and we start trading up into the gold area of, you can see on this chart, it's the daily price movement range. Start trading up into that gold area. Now the expectation is for movement lower. All right. So I can't be bullish here. I'm not terribly bearish, but that's really all I could do. Long puts on rips up into that gold section, that gold zone, the daily price movement range of my chart. Heads up for 240. That is the equator, and I would presume that will not go down without a fight. So let's presume support there, which could be another way in the process of being long puts. Think of it as maybe a secondary target, but this is where red meets the gold, and it would be bullish. I'm not bearish. It would be bearish. I'm not bullish this at all. Now, if you are bullish, I would say a level to keep an eye on might be 225.5. And if you are bullish, you can take a very aggressive approach to that level at 240. If not, I'm a bigger fan of either doing nothing, long puts on rips higher. And then if we get around 240, 239, let's just see which side, the bullish hemisphere or the bearish hemisphere, coin wants to remain. But this is heavy. This is heavy. It's a heavy environment. Okay, next up is, let's see here. Questions. All right. Question here. Who is the target audience for my upcoming immersion? Fair question. Beginners or current members of the mastery who want to learn the methodology in more detail? I would say both, but let's define what beginners are. And let's define a candidate. And, look, this may not be what most traders are going to hear me say. I am not a fan of traders starting trading, which is very risky, where you can lose a lot of money very quickly. I'm not a fan of anyone starting a business. Trading is a business, underfunded. So for a lot of times, beginners will start with very low sums of capital. I know some people will say, hey, start with 500, start with 1,000. I find that markedly, frankly, and I'll say this unapologetically, that's irresponsible. Starting with a very tiny amount of money with stars in our eyes, thinking we can grow an account, is not ever what I want to insinuate, because it just ain't true. Sure, there are lucky people, but I'm sure, hey, didn't someone just win the Mega Millions in California? That's luck. And wow, I wouldn't mind that kind of luck, but I'm pretty sure there's a couple other million folks who did not win the Mega Millions. So we don't want our probability of trading success to be like a lottery ticket, right? So that's where one thing I would warn anyone starting, like a beginner. Okay, the second part is some of the basics of trading. Ideally, you can get for free on the internet, whether that be what's a stop order, what's a limit order, what's a market order, what are candlesticks, right? That could really be beginner conversation. I think in this day and age, with as much as it's available on the internet for free, go get that education out there on YouTube. It's available, the basic stuff. Market order, limit order, stop order, candlesticks. And that could be one weekend of just diving into that. Once you've got a pretty good idea of what style of trading you want to dive into, maybe it's day trading. I do that. Maybe it's swing trading. I love that. That's definitely my preferred style, right? Maybe you might say, Rog, I really don't want to be a trader at all. I'd rather be someone who learns how to build a portfolio over the course of years, if not decades, more of a position or portfolio type trader. And that's fine too. We do that as well. And I think the notion that everybody has to be a trader and have the short-term outcome, day trading, scalping, even short-term swing trading, isn't necessarily viable for everybody. So it's not just a matter of beginner, and it's not just a matter of people who are already in the mastery. Anytime I do things like this, an immersion, obviously people who are already in the mastery are going to, they're going to say, oh yeah, I forgot that the first time I kind of went through the process. It's a great reminder. It drives the lessons home. And in fact, our current members are often a great support system for new traders, joining a community in the mastery. So oftentimes they're a great support system for folks starting off, but it's not a matter of beginners or current members. It's about where are you and how realistic is it to embark on trading, right? And those are just a couple of the things. And we'll talk more about it probably next month or later this month. But probably the best thing to do between now and then is just make sure when I'm doing analysis, does it resonate, right? I think making sure the mentor you follow, that they're a good fit for your expectations. Look, here's a really good, if you're expecting lots of trades every day, in and out, in and out, in and out, I would not recommend my style is for you. But if you want to boil it down to the easiest way to say, hey, who is this immersion for? Here's the best way to look at it. It's really for just about, other than rank beginners, it's about all levels of traders who are suffering with consistency. If you don't have consistency in your trading, consistency in risk management, consistency in position sizing, whatever, this is the immersion for you. It's really about consistency of account growth. So if you are looking at, hey, Rog, that's definitely the part of my game that's missing. That's definitely what, as a mentor, I bring to the table. So I hope that helps. All right. What are all those moving averages? They're no longer moving averages on this chart, UG. My tops indicators, which by the way, you can get for free on TradingView. If you're on TradingView, gang, you can get tops here. If you look at the indicator list and just go look, I think it's just 34 EMA wave, grab candles. You can grab those. The tops is built on the 34 period. Now the top tier isn't the same calculation, but tops is. So these aren't settings like an SMA or an EMA that I can just say, hey, like when I show the stochastics, you probably heard me share the slow stochastics settings. I can very easily tell you, turn on a slow stochastic. It's a 21K, 3D, overbought 80, oversold 20, because it's an existing indicator where you can just change to my custom settings. That's not the case with the indicators on my screen. They are proprietary. They are custom indicators. So if you're wanting to replicate tops, go for it. It's the 34 EMA on the high-low close, right? But that's not what I'm running on my screen anymore. And by the way, again, those tops, the grab candles, the wave, that's for free, completely for free on TradingView. So you can check that out there. And if you find that's really starting to help you, you definitely want to then consider top tier, because it is absolutely a major upgrade to that process that I've used for over 3 decades. So thank you for the question. All right. Does daily price movement range work in Forex? Yes. So daily price movement, and so does the hourly price movement range for that matter. It does work in it. We don't have packs for it yet. So we have to run these packs. Packs meaning there's a process about a decade ago that I started to use that allowed me to start to understand that each symbol has a unique movement, almost like a price signature, right? It's got a price movement signature all of its own. The same thing for the euro is not something that I could apply to the S&P, to the ES. So everything had its own sort of price movement or its volatility signature. So we started forecasting volatility, right? Now, as long as I can forecast volatility on that symbol, then there's a daily price movement range or an hourly price movement range. And you'll see that on the ES, you'll see that on the 6E. I haven't dove into doing a lot of that with Forex, but yes, we've been considering a little bit more crypto. We've been considering a little bit, adding this to the pack, running my algorithm through it. So stay tuned, but I haven't been doing as much Forex trading as I did maybe 20, 25 years ago. But it's definitely something I like. In the meantime, you do have 6E and 6A and 6C and a number of the futures contracts that you can track as well. But yes, daily price movement range does work. And FX, it's a matter of running that data. All right, gang. So that is definitely the wrap up of the show. Yep, it's 9:20. All right, gang. So that is, as always, thank you so much. Thanks for the questions. And that is probably daily price movement range, Eon, is probably the most important indicator on my screen right now. Second, maybe to structure. They work very complementary. And having the ability to understand and see zones of volatility, forecasting that volatility that most folks can't see, it is a heck of an edge. I mean, look at this 6C. Look at how many red candles traded into the gold zone, right? If you're watching this on replay, freeze it, count it. Okay, Rog, red means I can only buy puts. And how many times did we hit it? And then it kept following through to the downside. It's pretty powerful. All right, gang, be good to each other. I will see you all for the next Charts and Coffee. Until then.